Let's do chapter 2. All right. Looks like this has 3 learning objectives. Let's outline those real quick. 1, describe the income statement, statement of owner's equity. Here, let's grab, hyperlinks. It's not cool. Oh my gosh, you're kidding me. How do I turn off hyperlinks? Select. All right. Describe the income statement, statement of owner's equity, balance sheet, statement of cash flows. So these are the 4 financial statements. What's the name of this? Introduction to Financial Statements. All right, so this is going to be all about financial statements. So this shows us the 4 financial statements and how they interrelate. That's a big one. Define, explain, and provide examples of current, non-current assets, current and non-current liabilities, equity, revenues, and expenses. Oh, wrong button. Wrong button. Prepare an income statement, statement of owner's equity, and balance sheet. All right, this is a big one. Probably going to split it into all the different learning objectives. Just because I'm curious for context, I want to know what the next chapter is. So, analyze and record transactions, adjustment, cycle. Okay, so to give ourselves context, if we wanted to say, in the grand scheme of things, where are we at? All right, come over here and draw. So what we've discussed thus far is the concept that accounting is language, how stakeholders have information provided that they can judge an organization off of. All right, so now we're talking about what is this book in which the story is told. And the way that the story is told is using financial statements. So I call it the book. So let's separate these. Financial statements are an output from, let's say, the book. So up till now, I've kind of condensed this explanation just into this book graphic. And maybe I still will. I don't know. So the financial statements are a thing. And then let's say the records and the organization of those records. I think I want to go to AI to think about this. So I've got this Perplexity app. I created a space for Accounting Wit, and this, I'm going to think out loud what I'm trying to think about right now. So I'm trying to think through how to diagram the landscape of accounting information. The books or the financial statements are what are produced from the, I'll call it the books. The books are where the journal, ledger, trial balance are. An accountant translates activity, so transactional analysis, into accounting entries. They are organized in the books. The financial statements are the standardized reports that are used to communicate the story of the business. If I wanted to categorize these into two buckets, financial statements and everything before that, how should I do it? Let's see what they say. All right, so it doesn't necessarily disagree with how I would do it. So we'll call it the books and the financial statements. The problem with this is in all the diagrams, I always synthesize all this together as, if somebody is communicating their story to outsiders. So I need to change how I do that. Because, for example, in chapter 1, I'm saying, okay, a business has its books and it communicates it. I need to change that to be the communication is not by handing them the book, it's by handing them financial statements. So it's like businesses have books. So I need to split that into, you've got books and then financial statements. the books are where an accountant translates, organizes the information. The financial statements are the product or the printout or the report. So that's an open question, is how to communicate kind of that differentiation there. So coming back to here, we want to describe these financial statements in the context of what we've talked about thus far. So I was repeating, but up till now we've talked about a business has its story written in books. And these books are, let's call it a journal of activity. And that's all internal. And then you've got the stakeholders and the way that the story is communicated is through. So we want whatever graphic kind of whatever we have here, we want it to represent that it's a standardized so it's 4 financial statements. So let's, for now, say that. So a business has activity, gets put into a journal, stuff happens, and then these financial statements are produced. And these are what stakeholders judge by. Okay, so coming back to the point of this chapter is to say introduction to financial statements. So there's 4 financial statements. So the 4 standard financial statements: balance sheet, income statement. Then I'm going to kind of separate this and say statement of cash flow and statement of owner's equity. So we've got these 4 financial statements. In context, what they are what's used to communicate the story to stakeholders. Boom. Okay. 2, and just a reminder, what I'm doing right now is I'm looking at this chapter and I'm just looking at the learning objectives and creating. It's like I'm creating a garden. I'm getting the soil ready to go through the information. So I'm laying out like whatever context I have in my brain, so that as I'm learning things, I have somewhere to put it. All right, so learning objective 2, define, explain, and provide examples of these things. So the way we're going to do that, this is where we are going to represent or introduce this picture. I might change it. So I got to think through how to introduce this picture and then prepare. All right. Not exactly sure how they're going to do that. All right, well, let's go through and let's look at this. Okay. Why it matters. Okay, so starting with a story. You've got an ambitious young teenager that's trying to do an activity. He's trying to do community service, and the idea comes to him that he should borrow money to buy tablets for this little business he's putting together. Well, in order to go and talk to a bank, he's told that the bank is going to want to see financial statements, or I need to see your financials. So how can we drive this point home? That kind of setting the context here. So there's this wall. Brick wall. Between you and let's just say the sandbox of business. To play in that playground, you have to know how to communicate. So That's not what I wanted to do. Let's say that there's an entrance through this wall, and the way through it is you have to be able to communicate using the accounting language. So the bouncer at the door saying, "Show me your financials." So, I mean, that's really the truth is, oops, I was on the wrong screen, is you have to know what financial statements are to be able to play in that playground. So that's why it matters. So, what are financial statements? Okay, this is where, well, let's see what it says. Study of accounting requires an understanding of precise and sometimes complicated terminology. So you have to know the grammar, vocab, terminology, purposes, principles, concepts, organizational, legal structures. Okay, so the study of accounting requires understanding of. All right, so back to what the requirements are to be able to speak this language. I mean, I was a Boy Scout, so I always think of things in terms of merit badges. Like, what are the things you have to pass off? Let's just call it the prerequisites. What's the prerequisite knowledge to understand accounting? There's terminology, principles, concepts, organizational and legal structures. All right, so that's what's going on here, is to learn accounting, to be able to play this game, you have to know certain terminology. You have to know certain terminology, principles, concepts, organizational and legal structures. So let's keep track and call out as we're going through this. All right. Here's the list of terminology you got to know. Here's the principles. So terminology is easy to identify because it's, lingo. What's a word and what's it mean? But then the principles, concepts, that's what we're going to be getting into with some of these other pictures, is like this one that we're going to get to, where you have these financial statements, how they're organized, how they interact, is all concepts that are foreign. Like if you haven't learned accounting, then you do not know the concepts. Okay, so learning objective 1 is understand terminology and concepts behind financial statements. All right, so what are the financial statements? Well, there's 4 of them. You got to learn those 4 major types and their interactions. Then you've got to know business structures. All right, so I'm wondering why business structures are thrown in here. All right, so concept, business entity structure. So here's this concept. I'm going to make a new slide here where I'm going to keep track of concepts. So business entity concept. All right, so in learning objective 1, we need to take away the business entity concept. All right, what's this? I'm thinking that this is talking about the concept of wearing hats. Like, what hat are you wearing? You're wearing the hat of business owner, or you're wearing the hat of an employee. This idea of different contexts. And why that's important is because whenever we're talking about a business has activity and it's recorded in a journal, to do that accurately, you've got to have this concept of whose journal is it? So let's say it that way. Whose journal is it? So, for example, okay. Let's come back to perplexity here. I want to figure out how to explain the concept of the business entity concept. I want to think of some illustration to really to highlight how activities are part of a business or organization separately than the owners or other organizations. See if it gives me some ideas. So different containers. So some quick ideas are coming to my mind of like the idea of a corporate veil. I want to bring that into it. The idea of company bank account. Commingling. These concepts will come up later, but I think they probably are familiar enough that they can be used to explain this idea of context. Oh, so self, rent, or transactions with oneself, the concept of arm's length. So these are concepts that help illustrate okay, so how does the book dive into this concept? So legal structures. I don't want to get into legal structures until we really understand this business entity concept. So these are getting into structures. Okay. So I don't want to get into the legal structures yet. Let me make a place for that. How can we really... So why is it important to know this business entity concept? Can't type. So why is it critical to understand this concept? What mistakes can occur if this concept is not understood? Why would such a mistake be bad? So I'm starting to think of ideas of it's especially important when there's other stakeholders involved. Let me get this idea down before I read that. So let's say we've got these dotted boxes, and I'm trying to decide where to put... What am I putting in them? Needs to be some kind of object. I'll start with just money's too easy. Okay, I'll start with money. I'm going to put money in this box or that box, in A or B. Which one should I choose? Well, it doesn't matter. Like, there's nothing as a part of this story that makes one matter versus the other. What if I say that box A, let's say there's there's a place where things come in and a place where things come out. Say some kind of valve or something. Let's say that box A, there's like a split. So let's say these are pipes. There's a split where 50% goes this way and 50% goes this way. Well, if I put the money in A and then it comes out, I'm only going to get half of it. If I put it in B, I get 100% of it. Which one are you going to choose? Well, I'm going to choose B, because why would I ever choose A? Because A, sorry, I should be on this. If I choose A, I'm going to lose half of it. If I choose B, I get 100% back. Well, what if I change the story to say, if I put the money in A, inside of it, it's going to grow by 3 times. Well, would I rather have 100% of something that doesn't grow, or 50% of something that tripled? Well, in this case, I'm going to get 1.5 back. In this case, I'd get 1. So now I'm down to choose A. Well, this is illustrating the idea that one box is different than another box, but these boxes are just made up. So what makes them real is just rules. Now, that's what this idea of this entity or this okay, sorry. All the different business entity concept. Because like when I started, the money was in my box. And then I moved it to another box. When it enters box A, decisions that I make about it affect somebody else. So these this context of what box is it in becomes important. Now, business is structured in a way that makes the lines between these boxes pretty clear. So when you go to the bank and open a bank account, it's going to be in the name, like the name on the bank account will either be A or B. So that makes it say, okay, if there's some money, which bank account is it in? Well, now we know what box it is in, because is that bank account in the name of A or B? But sometimes it's not so clear. Like, example coming to mind is if you have a car that's owned by a company and you're driving it for personal reasons, is you driving that car, what box is it in? A personal box or a company box? To the outside, it all looks the same. It's just you driving a car. But there's this made-up box. So this context. So this is a critical concept to understand in all of this accounting, because this concept, when we come to, we're talking about an organization with a journal. That organization is a box with a dotted line, and there's activity happening, and it's a question of, is it something written in the story of that business or in another business or with somebody else? Okay, so here's something just came to my mind of an example. Trying to decide if we'll figure out if this makes sense, but let's just go with it. Somebody is a teacher inside of a school. When they buy supplies with their own personal money and bring it to school and use it with students, whose supplies were they? So, who's losing money? Is the school gaining money because somebody else paid for the supplies being used in the school? Is the teacher losing money because they're paying for things? So this is like an illustration, not necessarily saying what the answer is, but it helps. It's illustrating this, the application of this concept of like entities. Like there's a teacher in the personal entity and a school, and activity is happening. Whose story is that activity a part of? Are those supplies being used part of the school's story, or is it part of a teacher's story? It's a good question. So we're really diving into this concept of business entity concept. So I need to figure out some way to really drive home what concept needs to be understood there. So this is me brainstorming. Okay, well, let's flip back over and see what the AI is saying. So it's about boundaries. So boundaries between the affairs of business and others. So let's just say it's critical to establish these boundaries and what an activity, what box it's in. Okay, so it's identifying that an entity is independent. I don't know how to spell. From owners and other entities. So this might be the core statement. So that's where this, commingling, the corporate veil, arm's length, company bank account. I think this is really the point, is this statement. So it's establishing, this whole sentence is good. Oops. Copy. Establish a clear boundary between the financial affairs of businesses and owners. So let's say it again. An owner is an independent entity from a business. There are clear boundaries. A business entity and the owner. So if an owner spends money on behalf of the business, did the business spend money? That's a good question to really draw out this thinking. So I think that could be debated and really help draw this out. If an employee spends money on behalf of a business, did the business spend money? And what does it mean for a business to spend money? We won't get into that. We'll just leave it colloquial. Okay, so I think these... All right, well, I think if those questions are asked, to do that analysis, you have to start to view owners. So owner, clear boundary. It's establishing that each one of these things has a book. They're different stories. That's the main takeaway. They're different. They have different books. They have different stories. All right, so that's really the main concept here. Business and owners have separate books. Okay. So now we introduce this idea of legal structures. And maybe the way to... Oh, I want to finish saying what this said. Okay. I got the important stuff. All right. Legal structures. So the things that are coming to my mind about this, if we're going to translate this concept into, there's different books. All right, go with me here. An owner has its books, and a business has its books. A business let's start with a lemonade stand. We need to think of some simple business, but let's start with the lemonade stand. All right, if this person goes and sets up a lemonade stand and they go and they buy supplies and then they sell lemonade, and so they end up with money, which book are we writing that story in? Well, when does it rise to the point where you would want to call it a business? Let's say you're doing this one time. Maybe there's no reason to make a business. I remember once I met somebody when I was a teenager, and I told them that I owned my own business mowing lawns, and they said to me, "No, you don't. You just mow lawns." And that always stuck with me because the reality was I didn't have a business. I just mowed lawns. What makes something a business? Well, that's for everyone to decide, but for me it was, okay, when it's consistent, and maybe one of the litmus tests is when you're going to establish a brand. Meaning you hang out a shingle. You're going to make it publicly known. I do this thing, and it's a business. So one way people do that is they'll establish like a doing business as, a DBA. That's just telling the public, hey, I've got this brand. I have this distinct box. We're calling it a business. Well, if your lemonade stand, if you're going to consider it a business, well, then you're going to write down that story in the business books. If you're doing this as a hobby or just a one-time thing, then why have business books? You would just write it on your own. You're going to need to have business books separate than your books when you want other people involved, like banks. Let's say it's when you're going to do that when you need to involve other stakeholders. The question here is, when do you need separate books? Maybe that's the whole crux of this, is saying, okay, when do you want separate books? That's going to be when you're going to make a business. Now, when you decide, hey, I'm making separate books, and you go to the bank and you open a bank account, now you're entering the world of, or if you're going to buy assets or buy equipment, now you're entering the realm of legal. I'm going to say need insurance. When do you rise to the level of needing insurance? All right. These questions will start to bring up the question of, do you need a legal structure? And that's what this learning objective is bringing up here, is this idea of business structures. So let's just say legally recognized separate or entity. What that means is, what's the name that's going to be on the bank account? What's the name on the contract to buy equipment? What's the name on the bank loan? What's the name on the insurance policy? What's that legal entity? And then the question is that legal entity separate than the owner? Is it separate than you? Because that legal entity can be you, even though it's a business. So coming back over here, you can have a business books, that's a separate set of books than you, but still legally you're the name on the books. You're the one that's on the insurance policy. You're the one on the contract. You're the one taking risk. Well, that's what's called a sole proprietorship, is when the owner, the business legally is owned by the owner as one person. Now, when you start to say, all right, we want this legal entity to be owned by more than one person, that's where partnership comes in. Then, if you want it to be owned by a completely separate entity that's its like own legal person, separate than you, that's where corporations come in. So let's just say that generally there's 3 different types of structures: sole proprietorships, partnership, and corporation. So these are types of legal organizations in the eyes of the law. And these are the legal entities whose name is on the books. So how do we really illustrate that? Okay, we're introducing the idea of a business entity concept. We're saying, all right, an entity is independent than the owners for purposes of books. I think the way I want to say it is, business and owners have separate books. what is the name on the books? Meaning, like, whose books are they? Who's... Oh. So, going back to this picture of, you know, an owner's books, a business's books. So when I say an owner's books, that's like your personal bank account, your personal, you might have personal financial statements. Most people just have their bank account as a way of representing, here's my financial situation, or here's the list of assets I own. Then you've got a separate set of books for the business. Now the question is, whose name is on those books? Whose name is on the bank account? Whose name is the legal owner of the equipment? Whose name is on the insurance policy? Well, it's going to be one of these types of entities. It's going to be the owner themselves. It's going to be more than one person together. Now, the difference between a partnership and a corporation is, in theory, it's individuals owning it together. Let's see what the book says. It's an association who contribute. I don't want to get into tax. So one way to maybe think about a partnership is it's when more than one person has control completely. So two people each have complete control. Then a corporation is a completely separate entity with a, let's just say it's not a person who controls it. There's a whole governance structure behind them. So the important thing here is to know that a legal structure is this concept of a legal entity that is legally the name that owns the assets. So I think I need a workshop how to explain that to be able to get the real point. Because all of this, everything we've been talking about here with, this entity concept and these legal entities, the whole reason we're bringing those up is because we need to be able to have a clear picture of who is or what is the boundary around activity. Things happen. Where's the boundary around those things so that we know what goes in the story? So going back to when a teacher buys materials for their class with their own personal money, is that part of the school's story? If an employee spends money on the behalf of a business, did the business spend money? Is it in the business's story? If an owner spends money on behalf of a business, did the business spend money? Those, understanding the legal structure of things is this important concept to know to be able to write the journal. To be able to know what activity is included in the journal. Okay, so that's how we set the table. So let's go back to the top here. I don't like how these learning objectives are spelled out. I feel like I would say them how do I insert text? I would say it's business entity concept, the idea of legal entities, and then these are, what are the boundaries? No, whose book is it? Whose journal is it? And what gets written in it? What gets included in? That's number one. Whose journal is it? What gets included in it? Then, next is when the story is told, or how is the story told? With the standard financial statements. So usually whenever someone's teaching financial statements, there's this implied assumption that you're talking about a corporation. Because when you're talking about sole proprietorship or partnerships, those others, I mean, some of the statements are not as applicable. So anyways, so we've got the 4 financial statements. Let me reorder these. All right. All right, so with the 4 standard financial statements, what are they in context? You've got an organization, you've got a journal. They get translated into these statements that are communicated to stakeholders. So what are the 4 financial statements? Balance sheet, income statement, statement of cash flow, statement of owner's equity. All right, what does it want us to know about these? Spoiler alert. So accountants create financial statements. Financial statements are reports that communicate the financial performance and financial position of an organization. So what is communicated? So we just said how it's communicated, but what is communicated? What the heck? Hate that. The financial performance and financial position. Performance and position. All right. Let's see what this says. Purpose of financial statements. Okay. We've introduced stakeholders already. All right. Here's how I want to explain this part. What is communicated? What is communicated is between 2 points in time, how has the value of the assets of a company changed? Meaning, where did they start and where did they end? Where are they now? And then, how much of the change is for the benefit of the owners? That's what financial statements are telling you. Also, one of the judgments you want to make about it is, so that's what the story's telling you. In an established language. So there's no real latitude to change how it's told. Like, this is what's told. Now, as a stakeholder, what does a stakeholder want to know? They want to predict the future. That's basic, or like they want to make judgments about the future. I think that's really it, is financial statements communicate to stakeholders the financial performance and position. What that means is, here's my position, and what that's saying is what the value of my assets are. And then over the last period, I'm going to try something new real quick. I'm going to try talking with my hands. Okay. We're going to try a new trick. Oh, yes. All right. Financial statements. What they're doing is they're saying, right now, here's your current position. Current position. Here's where you started. So between point A and point B, how much have the assets grown? So let's say that this y-axis is the asset value. The asset value of the company. Like, so all the assets the company owns, what is their value right now at the current time? So obviously x-axis is time, and this is now. So what the financial statements are telling you is the current position. Because if you remember, the whole statement here is the financial performance and financial position. So financial position is what are the current value of the assets. And then when it says what the financial performance, or sometimes you'll see it called the statement of change, is how has the how have the value changed? But whenever you're talking about the change of value, this whole change in value right here, what's important to know is what portion of that is for the benefits of the owners. So benefits the owners. So this is how much of the change of assets is for the benefit of the owners, and what is the current position of the assets in terms of their value. That is what the financial statements primarily are communicating. All right, so I like that. That's cool. This is my first time trying that. All right, so wrong button. That's what's being communicated. The financial performance and position. It's telling you between 2 points in time, how's the value of the assets of the company change, where'd they start, where'd they end, where are they now, and how much of the change is the benefit of the owners. So if somebody if somebody's showing you this story, as a stakeholder, if a business tells you that story right there, the question is, can you predict the future from that? So that's the purpose of these financial statements. So purpose of financial statements before So a stakeholder is someone that's affected by the decisions of the company. We should, so we've got our concepts page. We should have our critical vocab terminology. I'm pretty sure there's a glossary in the book, but I'm just going to make a note that it's important that we dive into stakeholders, because what this is saying is that understanding the perspective of a stakeholder helps you understand the purpose of the financial statements. And so I've kind of introduced it as the stakeholder wants to make judgments about the future. So how do the financial statements help you make judgments about the future? By telling you how it's changed over time. So it's basically, what direction is it going? What position is it at? And what direction is it going? Because past usually will predict future is the theory. All right, so a stakeholder is someone affected by the decisions of a company. I feel like we made a list of stakeholders in the last chapter. Did we? Maybe not. We need to have a good list of stakeholders. All right. So what is the income statement? The income statement shows an organization's financial performance over a period of time. I don't really like how that explains it. It gets really wonky. I think I want to explain it differently. So before, I had made an attempt at this concept of you're telling a story of a business. You've got the statement of position, statement of change. I think we need to introduce this idea of the creditors and the owner stakeholders. So, in order to understand at a deeper level what these financial statements are, we need to be able to explain this picture. All right, so if I started over and said, what are we doing? How is the story told with financial statements? What are financial statements? How do financial statements tell the story? So the story is told using financial statements, which tell you position and direction. How do financial statements tell the story? You need to understand the box framework. So this whole thing is a build up to saying, if you want to know how the financial statements work, you have to understand this picture. So that's the big statement. If you want to get through this wall and you want to know how a business, how an organization shares its story. So I think this is the main picture. If you want to know how the financial statements communicate, you got to understand this picture. So let me find my prettier version of that picture. I want to make a simpler one than that. Here, we'll start with this one. You must understand this picture, but I want to adjust it. So what I'm going to do, I'm going to add these zones. And then I'm going to expand this to be actually, we'll start there. This is the simple version of it. Oops. Level 2 is where we will expand it. Okay, we'll go with that. So, you must understand this picture. Then you can prepare financial statements, which is you got to learn how to journal. You got to learn how to ledger. You got to learn how to trial balance. Then you can prepare. In order to learn how to journal, you've got to learn that picture. Then you've got to learn transaction analysis. I got to figure out a name for this picture. We need a name for this. The accounting wit framework. The accounting wit We'll just call it the secret framework. I don't know. I mean, it's not secret, but debit credit framework. I don't want to call it that because I want to introduce it before those terms are known. I'm just going to call it the the story, the I mean, it's the accounting framework, but that seems duplicative. The LearnWITT accounting framework. Is it a model or a diagram? So I call it the accounting framework model. Model or diagram? I don't know. We got to figure out a term for this. You must understand this. Yeah, okay. Anyways, that's where we end. So the next thing I've got to do is break that down. And then we'll get into chapter 3 after that. So part 2 will be explaining the rules of this picture. The rules of the accounting framework model / diagram. What are we going to call it? And the rules of that are, so principle or concept number 1 is owners versus creditors. The idea of order of claim. And then the next principle I mean, we can look how I did it before. Asset, value, realization, and recognition, and then double entry accounting and the balance and the big center line. Got to figure out a name for that. Okay. Anyways, these are breadcrumbs for me to start next time. All right, well, I think we're getting close to being able to start workshopping this stuff. All right, well, till next time.